could save me from my isolation. It's way too complicated. Let's stop this conversation. Let's stop this conversation. We got no relation.
All right. All right. Chat. Chat, good afternoon. Good afternoon, good afternoon, good afternoon. Holy Roman. Upstate Futures. Shahid Salam. Shahid Salim. Howdy. Nasdaq catches some selling. Holy. Holy chat. If you're just tuning in, be sure to come through, smash the like button for your boy. Smash the like button for your boy. Decent pre FOMC, 100%. It's not been bad. Chat, it has not been bad, bro. I will say I'm pretty much break even on the day. I took a couple trades. One, it was an L. The other one was a winner. So, and we're break even on the day. We're up like $14 on the day, chat. We're up $14 on the day, baby. Time to buy the Lambo. It's Lambo time. Also, chat, I have the Chipotle on the way for lunch. Chipotle is on the way, baby. What up, Tris? We got the rate statement today. We got Daddy Powell coming out to speak to us. We have an action-packed afternoon, baby, and we're going to be live for all of it. Absolutely all of it. $14 to make them holla, baby. Holy, I love it. Go to the strip club, throw the $14 around, huh? What do you think? What do we think, chat? Holy. We got more people coming through. Only 4 likes on the stream, chat. Listen, we need some more likes on the stream, bro. I'm trying to give you guys a giveaway today. Not only that, we're feeling pretty jacked today. You know what I mean? We've been hitting the gym hard, baby. We've been hitting the gym absolutely hard, chat. And we're coming for it. You know what I mean? We're coming for it. So we need more likes on the stream. That way I can give you guys a giveaway today. We can do some do a Tradeify giveaway. How about that, huh? We do a Tradeify select account giveaway today. So we need more likes on the stream. And we need all the vibes for FOMC, baby. Holy Bielka. Hola. ¿Cómo estás? Trader 007. We got G-Man in the building. Holy. Chat, I was on Ninja Trader stream this morning. And literally the moment I hopped on their stream, chat, I was immediately getting roasted. Like, I didn't even have time to say anything before I was getting roasted, chat. So I'm pretty sure this is just a fucking thing at this point where I can't show my face on the internet without being roasted. So there's that. Not only do I gotta tolerate you guys, but now I gotta put up with Ninja Trader chat roasting me all day long. Like, I don't even know, bro. I truthfully, I don't. G-Man, drinking by Celsius, bro. What flavor are we talking about? What's the flavor? Yo, what is my DoorDasher doing, bro? DoorDasher need to get the fuck on it and get to my house with my shit before I freak out. I'm about to go hunt down this DoorDasher chat. I'm about to throw the stream up on my phone. All right, so you guys can come with me while I go hunt this DoorDasher down and get my food. Tropical vibe. Yo, that's what I had this morning. Right here. Literally had the same one this morning. Chat, I got a double steak bowl from Chipotle coming. Holy. What do y'all know about that? Also, should we change the background lights? Hold on. We had blue for a while, chat. What should the background lights be? Tell me what y'all think. We got blue. We got green. All right. We got red. We got yellow. We got that color. Or the light blue. What do you guys think? We got red, green, purple, pink, yellow, blue, light blue. What do we think, chat? Or should we turn into a rave party, huh? Should we turn into a rave party for FOMC, chat? I don't know. What do you guys think, bro? Hold on. We change it up. Change colors there. There we go. We can do that, huh? What do we think? Rave? Rave it out? What do we think, chat? Hold on. Slow it down for me real quick. Hold on. Slow it. Slow it down. That didn't slow it down. That sped it up. Quick. I didn't do nothing. Color. All right. There's red. I think I could make it like change colors. Hold on. Oh, look at that, chat. That's like a freaking party, huh? Ole. Ole. I'm kind of feeling that color, chat. That's what I'm feeling right there. It's pretty. You know what I mean? It's pretty, chat. Don't care the color. Just waiting for the holy moly neon sign, bro. Listen, it's coming, baby. It is absolutely coming. I promise you that. I'm going to do it. I'm going to do it. All right, where's my DoorDasher? Hold on. Uh-oh. DoorDasher is getting close. I guess we're not going to have to go hunt her down after all, chat. I guess we don't got to go hunt down my DoorDasher after all. Crypto is pumping. Let's take a peek. We got time. BTC. Yep. Crypto, Bitcoin, trying to make a little move ski. That upside. $26 remaining. Yep, we got 26 minutes until the world decides its fate. Don't steal my fries. I ain't got no fries with this one. This is a double steak burrito, baby. Double steak burrito. Or not burrito, bowl. Double steak bowl. My bad. The double steak bowl. I'm convinced my DoorDasher don't know where the fuck he's going because I'm watching him on the map and he's just all over the place. Looking very confused. You're watching Solana? Trader King. What's good, G? Let's go, let's go, let's go. Chat, we are break even on the day, up $14. A whole $14, baby. I gotta reset the update this. It says I'm still down 271. That was from that one trade that I took. Let's reset this. There we go. Bang, bang. We're up $14, chat. $14. What do you think? I'm so predictable. What you mean, Miss K? Huh? What you mean, bro? All right, DoorDash, where you at? You getting close? I'm hungry. I'm about to freak out on my chat. DoorDash is getting close. Double steak bowl. Listen, I almost got a burrito today. I really did. But then I realized that I'm gonna be a little bit lower on carbs today because I don't lift today. I lifted yesterday and Monday. No lifting today. Just got a little bit of cardio, a little bit of abs to do. And then we lift Thursday, Friday. So lighter on the carbs today, chat. Lighter on the carbs today. We're getting shredded, baby. We're getting shredded. We gotta get fit for. I'm gonna be in Miami next month. All right. I'm gonna be in Miami next month, and then in February I'm gonna be in Playa del Carmen out in Mexico. So we gotta get shredded, baby. We gotta get absolutely shredded, you know. Hang on, chat. I gotta look something up real quick. All right. You better just fast until then. Hell no, bro. I ain't doing no fasting. No Sirski. Oh, my order's dropped off, chat. Hang on. Bang, bang, we here. We here. We here, we here, we here. We got the food, chat. Holy. We got the food, baby. Are you often on the Ninja Chair live stream? I'm on there whenever they ask me to be. That's pretty much it. I'm on there again tomorrow. I think I'm trading the close tomorrow with Ninja Trader. Or midday mark. I don't know. I have to look. Let's see. Hold on. What am I on? What am I on? I trade the close tomorrow with Leo. So I'll be on Ninja Trader. Oh wait. Yeah, I trade the close tomorrow. So I'll be on Ninja Trader trading the close tomorrow. So we'll be live on my channel tomorrow morning. And then on Ninja Trader to trade the close in the afternoon. Ismail, what up? Guacamole? Nope. Nope, nope. Hey, Paul, what up? What up, what up? Chat, y'all gonna have to deal with me eating lunch while we wait for FOMC. We got about 19 minutes till the rate statement. Duck race after FOMC, yep. We are gonna be doing a giveaway today. I'm thinking Tradify Select plans, chat. We might do 100K today too. 100K Tradify Select plan. What do you guys think, chat? Here, you know what? Hold on. Here's what we'll do. We'll do a poll. I'll let you guys decide what you want. All right, chat. You guys decide, bro. There's a poll. We'll give away one of those accounts today. You guys choose which one you want. Redneck, what up? Roman says it's got to be my turn to win. Holy. Jake Caldro. What's up? I don't see the 25K cash account as an option. I'm not giving away $25,000 to you fools. What you mean? You sent me on Ninja Trader? Yep, I was on Ninja Trader this morning. All right. Hey, Redneck. If you donate $25,000, I'll do a $25,000 cash account giveaway. Sound fair enough? Chat, what do you think? If Redneck donates $25,000, we'll do a $25,000 cash account giveaway. Nah, Redneck, you heard me, bro. You heard me. Oh no, Trader King, bro. No, don't even, bro. Let's not. Let's not, dude. Holy. G-Man says, I ate my duck. Yo, duck's actually pretty good. We had a restaurant here in town that serves duck. Trader King, I know. I know. Yo, Big Frank in the building, baby. Holy. Chat, y'all know what happens when Big Frank's in the building. Chat, y'all know what happens? That means if y'all don't hit the like button, Big Frank gonna come find you. And nobody wants Big Frank knocking on your door, bro. Listen, if someone got a name called Big Frank, you don't want them knocking on your door. Which means you better hit the like button. You know what, though? He doesn't even need big in front of his name. Even just Frank. Like, if you think of somebody named Frank, they just sound like a monster. You know what I mean? They just sound fucking huge. Like, the name Frank just sounds like a 6'3", 250 pure muscle, ready to F you up type of person. And really, our Frank is 5 feet, 100 pounds. Something tells me that Big Frank isn't 5 feet, 100 pounds. Frank, I'm going to guess, based off your name, I'm going to guess you're 6'2", about 210. About 210, 220. Ah, 6'1", 185. Okay. Oh, you're a lean 6'1". Yeah, you're a lean 6'1". That's Miss K said you single, Frank. Frank, I was gonna guess you're strong. Like I was gonna guess, considering the fact you're 6'1", 185. You sound like you lift. So I was gonna guess your bench is probably close to the 300s. That was gonna be my next thing that I said, but you already said it, so. So that's why he's named Big Frank, chat. He's 6'1", a lean 185, and benches 345. Like that. He's a tank, bro. Trades by Judas, 6'5". Holy. Chat, y'all making me feel small, bro. You used to play football? How old are you, Frank? Did you play college? Or pro? Talk to us, Frank. Who we rocking with right now? Who we fucking with? Who is Big Frank? We gotta know now. 6'1", 185, benches 345. We gotta know who Frank is. We got Logan in the chat. Holy, what up, Logie? What up, little Logie? We got 6.5 minutes till the world decides its fate. College, and you ran track. Where'd you play college at? Carrie's asking Logan what he's seeing today. Logan, we're gonna get some call outs today. Logan, where's our call outs, bro? The whole chat is now waiting on you. Guitar Guy says, what's up, guys? I'm new here. I just subscribed. Guitar Guy, welcome. Holy. Welcome to the fam. Stick around. We're doing a giveaway today for, it looks like you guys have voted on a 150K select account. So we're going to do a duck race today for a nice little TripI select account. As long as the votes stay up. Right now, it's 45% of you want a 150K select account. 20% want 100K and 35% want 50K. So right now, 150K select account is in the lead. Logan's about to smash 10 accounts. Welcome to the ball gang. Facts, bro. Still trapped in a long guess this will turn into a YOLO open trade for FOMC. Oh God, Ismail, trader in development, who's supposed to be my Spanish teacher, who bails on me and is not teaching me anything, is trapped in a long and not gonna be out before FOMC. So RIP those accounts. RIP those accounts, bro. Holy. Hey, Ismail, remember that day where you're supposed to teach me Spanish? Remember that time? Remember that time period of our life? Do you enter in the Discord? Yeah, we'll do the give. Well, yeah, the keyword will be entered in the Discord. Am I free today? Yeah, I'm free right after this stream. I ain't got nothing today. Nothing to do today, baby. I just gotta do a little bit of cardio, a little bit of abs. Didn't we have a Spanish Discord channel? We did, actually. We did have a Spanish. We just didn't have enough Spanish speakers. Jay has no friends, so no plans. You know what? I'm not gonna argue that. I really don't have friends. I have one friend, and he's in the chat. That is my one friend. I got no friends, bro. My one and only friend is in the chat. Logan, did you get your beauty rest? You feeling better today? Got about 2 minutes until the world either comes crashing down or we go into oblivion, right into the moon. I have a feeling that, like, we're gonna get some moves on the rate statement, but the moves are really gonna come when Daddy Powell comes out and speaks. Ismail is so deep in the red right now. What's your entry, Ismail? Hold on, talk me through it, bro. Talk me through it. What's Ismail? Ismail, what's your entry? Where are you long from? When Daddy says good afternoon. Yep, 100%. It's the most expensive good afternoon you'll ever hear in your life. 626. Okay. I'm guessing you got long at, like, right here at 12:48 Central. Actually, no, that wouldn't make sense. You got long at like 12:36. 12:36, right? Or are you long back here? Okay, gotcha. Gotcha. Big Frank squats 445. Holy. My back would absolutely snap. My kneecaps would buckle. My kneecaps would absolutely just snap. All right. Rate statements out, chat. Well, about to be out. About to be out. News incoming, baby. Holy. Ismail's getting the Ismail got the move, bro. Holy Ismail. You survived. Ismail survived, bro. That's crazy. That is insane. Did we cut rates? What did we cut them to? Holy fucking shit. Nasdaq absolutely cooking to the upside. I got a fucking splinter, bro. How the fuck do I get a splinter? Oh, that's gonna drive me crazy, chat. There we go. Got early, would have passed. Nice. Yeah, dude, you survived that. That's crazy. That's crazy you survived that. What'd you miss? Oh, the rate statement for FOMC. Nice, Scuba. Now let's send it all the way back down, chat. What do you think? Put a limit order of 5 cons at 25,610. Tag me in a rip to TP. Holy. You'll love to see that. You absolutely love to see it. All right, chat. FOMC statement is out. Projections still stay the same in 2026. Four officials penciled in 2 quarter-point cuts for 2026. So is that going to be enough, chat? Since we are predicting rate cuts in 2026, 2 of them so far. Does that send the market into oblivion? Who knows? Market maker Mario. What's up, dude? My day was good. We're break even on the day. I took a couple trades earlier when I was on Ninja Trader's live stream, and one of them was a losing trade. The other one was a winning trade. We're pretty much break even on the day. We're up $14 today. Got that Lambo money. Got the absolute Lambo money, baby. Four Fed said 2 rate cuts. 7 said no. Maybe, yeah, we'll see. Got 1 trade and said no them out. Yeah, that's smart, bro. That's smart. I had two good setups. I missed one of them. This is the one I missed. This was my setup that I talked about when I got on Ninja Traders this morning. I was talking about this here and how I would like to see us come back above IB low and catch strength. The crazy part is I literally talked about it and didn't take it. I literally talked about it. I was like, yeah, I want to see us come back above IB low here. And then bang, look what happens. And I miss it. I didn't even take it, bro. It's crazy. Absolutely crazy. You did my setup on YM. Nice. Nice. Yeah, I could have made some money today, chat. I'm kind of upset. I'm not gonna lie. I could have made some good money today, but I just missed it. I just barely missed it, baby. Holy. The sweep style one? Nice. Took out some key levels and ripped it into oblivion. I like it. I like it. Chat, just as a heads up, the Tradeify discount ends today, by the way. If you guys are wanting to... So I don't have the graphic on here, bro. What the heck? If you guys want to get the 40% off Tradeify accounts, that ends today. Why is this... Why is my shit, like, not working, bro? Hello? Oh my gosh. Nothing's working for me right now. Hold on. What is this? I'm getting the spinning wheel in my background, chat. I don't like it. I can't do anything. Hold on. I've got a spinning wheel, bro. It's not working. Chat, make it stop. Hold on. I got an idea. Hold on, chat. Got an idea. Maybe. So far, my idea is not working. Why does my shit not want to work? Chat, look at this. Why am I getting the spinning? Oh, there we go. Nope, still getting the spinning wheel. I'm still getting the spinning wheel, bro. I don't know what's happening. Somebody help. And now my screens, oh my God, bro. Now my screens are all messing up. Now I gotta do this. Chat, everything's breaking. Help. Everything's breaking. It's all falling apart. Now the question, do I blow 2 growth and complete it or what? Help me, Joey. Wait, hold on. I gotta catch up on your messages. Now I have 4 growth. Now I have 4 growth. I refuse to activate because now I'm working on select. Past 3 of them, put them daily. So I did trade those. Now the question, do I blow 2 growth and complete it or what? I'm confused. 2 are active. Which ones are active? The growth? And you have select accounts active too? Okay, you have 2 growth accounts active. What's your other accounts that are active? Okay, you have 2 growth accounts, 3 select. Are you wanting to activate more select accounts? Okay. If it were me, I would. Yeah, I would. Because I want the select accounts. I would definitely do that, Mario. Just because I want the select accounts more. That's just me, though. Mario, maybe you get one payout from them, get a payout from them, and then do it. You know what I mean? At least get something out of them. That's probably what I would do. I don't know, though. It's tough. That's tough. That's a tough one. My Tradeify YouTube link. Wait, my Tradeify YouTube link is broken? YouTube link? What Tradeify YouTube link? Oh, wait. Tradeify YouTube link. Oh, crazy. I see what you're saying. All right, hang on. Hang on. Got you. I fixed it. The first link in the description. Yeah, I fixed it. This is the link to Tradeify. If you guys want to use my link and code, use that link in the pinned comment there. And you can use code JM to lock in the 40% off as well. And chat, also, if you do lock in 40% off using my code, send me a screenshot in Discord. That's going to enter you guys for a free 150K straight to funded account. And I'm going to choose 2 winners this month. So if you use code JM and you buy 5 accounts, that's 5 entries to win a 150K straight to funded account. So use my code, send me a screenshot in Discord, and message me in Discord with a screenshot. Send me all 5 of them if you buy 5, or all 3 if you buy 3, whatever you buy. Get multiple entries, and then I'll put you down for the 150K straight to fundo giveaway, baby. The 40% off ends today, midnight. We do have Daddy Pal coming out in 17 minutes. On sled plans, but I've only ever used Project X, sticking with growth for now. Project X is going away. They go bye-bye. You baby Tradeify and YOLO Apex ones when I get the urge. So maybe today I might YOLO and Apex. Nice. Love that. Tradeify equals real traders. Apex equals DJ. And that's actually facts, because people load up 20 accounts over there at Apex and then just YOLO all of them. That's actually facts. Project X getting retirement soon from all prop going back to home. Well, Project X is the one that, like, they're the ones that are like not allowing Proffer and partners to use them. So it's all on Project X, but I think they're going to be a brokerage platform now. So I think that's the deal behind it is also too, is they're going to be, you know, a brokerage and not just like a trading platform for prop firms. But I would not put my own money in Project X, bro. Absolutely not. Absolutely not. There is no way I would use my own money into Project X. With all the issues. Holy. You saw what TradeVate is doing? Are you talking about the being able to convert to the micro with the mini? Yeah, I saw that. I need to look more into it. I saw a headline on that, but I need to look more at it though. You're saving your cash to donate to the 25K account. Let's go. Let's go. Chat, when Daddy Pal comes out to speak, I'll throw him on the channel here. We'll listen to him as we watch Price. That could be sweet if you want to scale out. Yeah, I think that's the point of it, is to allow people to take partials even on a mini. Toss Up is in negotiations to sell their company to plus 500. Wouldn't surprise me. Is that confirmed? So will I be in Tampa in May? What's in May? Oh, no, I won't be. Yes, it is. You can use my code on any Tradify account. Lightning funded, select, growth, works on all. All of them enters you for a giveaway. Once you send me a screenshot. We got about 13 minutes till Daddy Pal comes out. I really considered shorting up here, I'm not gonna lie. Really considered it. But it is moving and grooving, so my entry is already gone. I wanted the entry up at like 24s for a short. Like once I saw this, I wanted the next candle to pull back up to 24s to take the short. But we didn't get it. We just kind of already shredded to the downside. And we're still going. Damn it, that would have been a great short. That would have been a great short. He's looking at that too. Yeah, it'd have been a great. It'd have been a great one for sure. I've been a very quick, about 26 points, 36 points. A very quick 36er. You took it, nice. Up 2.5K on both. There you go. Yeah, that I wanted the same short, but I didn't squeeze the trigger. I wanted this to pop up more though. Like I wanted a little bit more of a move up to 24s before I took the short. Daddy Powell comes out in 10 minutes. We'll pull him up on stream here once we once he comes out. The Daddy Powell. There's 15,000 people watching the Federal Reserve channel right now. 15,000 people, bro. Getting ready to watch Daddy Powell. That's crazy. Crazy, crazy, crazy. 40 likes. Get the numbers out. Yeah, I agree with Miss K. We got 40 likes, bro. We should get more likes on the stream. We're doing a giveaway today. So surely we should be able to get more likes on the stream, huh? Surely? Pal, good afternoon equals short. Hello, everybody equals long important. Is that true? I don't know. I've seen every time I watch him, he always says good afternoon. I don't know. You hit like twice to help out. That means you unlike the stream. Chat, let's do a selfie. Hold on. Chat, I need you guys to smile, bro. Chat, everybody smile. Everybody drop the smile emojis. Dude, blink your eyes. Take one again. Wait for all the smile emojis to come through here. We gotta take the picture. There we go. Now they're coming through. There we go. Boom. Do that, and then we'll take a selfie. Get the Chipotle bowl out of the way. Boom. There it is. Chad, thanks for taking a selfie with me. Thanks for taking a selfie with me, bro. Man, look at that short, chat. Fuck. Would have absolutely just paid, bro. Absolutely paid. Do I trade gold? Yeah, I trade gold. I love getting some good gold PA, bro. Gold can be clean as shit, bro. Even though shit's not clean, but it can be clean. You can get some nice PA. Look at this thing just tanking, bro. Look at it just tanking. It's unfortunate. 2 trades I've missed today. that would have absolutely bankrolled. I'd be on like a $3,000 day right now, chat, if I had taken the 2 trades that I wanted. Had I taken the 2 trades that I wanted, I'd have made a fucking bankroll today. It's unfortunate. Unfreaking fortunate, dude. But instead, I'm over here up $14.
The night has come, it's cold and losing my control. Your light
Don't believe anything Logan says. I said about you. You're the best. Oh, you talk shit on me, Miss K? Miss K, you talking shit on me? Huh? Miss K, I'll revoke your mod status. Look at this thing just getting smoked, bro. I'm mad. I'm angry. Like, actually. 490? That's a long ways down. 490 is a long way for Esto Pesto. Is Logan here? Yeah, he's here somewhere. Probably lurking. Logan's lurking. Lurker Logan. Logan the lurker. What made me want the short on English, Joey? Holy, if I could talk. What made me want the short? Us unable to break a new high. Daddy Powell will make everything possible, Joey. I hope so. I hope he does. We need it all. We need it, chat. We need it. We need Daddy Powell to come in and give us opportunity. We live. Well, I don't know about some of you guys. I know some of you guys are overseas, but we live in a country of opportunity, supposedly. So we need to create opportunity. The American dream, chat. Oh, God. Where you can make money on the interwebs. Look at this thing getting smoked, bro. Dude, look at this. Of course I would miss this. Of course. Of course. Chat, do I full port now? Do we just full port this? On the personal account, chat? What do you think? Full port on the personal? 20 minis right on the personal account, chat? What do you think? What do we think? Did a tiny yellow on the Apex and YN just grabbed 600. Nice. We got Daddy Powell in basically a minute. Told you I was going to degen Apex. It is the perfect degen accounts, yeah. If you're a degen, that is the way to do it. Or those are the accounts to do it on. They're so freaking cheap. I feel like everybody needs an account to just be a total degenerate, chat. I feel like we all need that as traders. You know what I mean? Like, have the accounts that we know we're taking serious, but when we have that urge to just be a total degen, I feel like we all need those accounts. Where we can just get it out of our system, right? Get it out of our system on the accounts that don't matter. Because every single trader has an urge, chat. I don't care what nobody says, dude. I don't care what anybody says. All right, let's see if Daddy Pal coming out here. Is Daddy Pal out? Did we miss him? He already came out. Chat, did I miss him coming out? No. Hold on. Oh, he just came out.
Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments.
He got the purple tie on, baby.
Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation.
Yeah, it's pumping right now.
Though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures.
Now it's made a new high.
Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year. a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027,
Nasdaq trying to get dumpy,
unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy.
Nice, Frank.
In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions.
He has 47,000 people watching.
Framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans.
Nice,
We
Mario.
understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Here's where it gets juicy, is the questions chat.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems
What
like
a
with the
dump,
additional
bro. Holy
GDP
shit.
growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now, too. So it is, it's partly that consumer spending has held up. It's been resilient. And to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth
Look at gold.
from
What's gold
today's
doing?
relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and
Gold
put it in
getting smoked.
2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of
Nasdaq's trying to hold a bit here.
24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of a big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time, so it's basically a good thing, but that's certainly the implication.
Big bid there on NAS.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So
There's a lot of movement, John.
Interestingly,
a lot of movement. Be
everyone
careful.
around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful,
Nasdaq really trying to catch a bid here.
and
Maybe
you
going
just
back
have
up to the
people
highs.
who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone
Gold
agrees
might
on
be
the
insane
direction
tonight, John.
and what to do. It's more
For all the gold traders,
spread out, and I think that's only
gold could really be
inherent in the
insane.
situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor,
G-Man is
in the
working on
labor
his trigger
market,
finger.
so that
Probably.
the data may be distorted and
G-Man
not just
getting that gold trade
sort of
ready.
more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case.
G-Man, you getting ready for that gold trade tonight, buddy?
We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now, and having policy,
Nasdaq still trying to work up to the highs here,
range of plausible estimates of neutral.
Be careful.
That will be a place which will enable the labor market to stabilize or to only tick up 1 or 2.
We are going to do a
tenths,
giveaway
but we
after
won't
this FOMC meeting.
Any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 67,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down
And shorts getting cooked, yeah.
That's offset by increases in goods. And that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints?
Bulls are squeezing it.
What's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew. Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, then we try to take a balanced approach to to the two things, and we look at how far they are and how long it would take to get them back to, each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to, and I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, there's the announcement of a tariff, and then they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very that's one part of it is inflation compensation break-evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry, about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability. And the best thing we can do there is both to support economic activity, but also,
tough out there, I know.
Make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
Also, I turned ads off, chat. I forgot I had them on. I turned them
major
off, so you
American
shouldn't get any more
employers
ads.
like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening.
We got 69 likes, John.
People are not filing for unemployment insurance. And since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Enda.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
on the policy what?
On the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
a little bit of resistance.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so that's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and caught the really low. So it's made expensive for them to move. And we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods. And we estimate,
Jack, can we get 80 likes on the stream?
Most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? So that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think again, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. it may make other people have to find other jobs, though. So it could have productivity implications while also having, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
Listening to Powell is painful.
All things equal, yes, but all things aren't equal. There are many,
but we need
many
to,
things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave. Sort of every large economy in the world, sort of every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so we're all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
There you have it, folks. Daddy Powell himself, his time on the chair is coming to an end in May. Holy. Daddy Powell, Daddy Powell, Daddy Powell. Coming in with the rates. Coming in with the rates, baby. Holy. Chat, y'all ready to do a giveaway, man? Huh? Talk to me. Who wants to win a Tradeify account? Who's trying to win a Tradeify account, bro? Let me know in the comments. A lot of people waiting. A lot of people waiting. Holy. All right, chat. Here's what we're going to do. This is what we're going to do. Let me see. Good. Discord. We about to have the most epic duck race, chat. Holy. All right, hold on. What did you guys vote for? Oh, we got 38%, chat. 38. We got 81 votes. Holy shit. 38% of you say 50K select and 37 said 150, chat. Holy, there's a 1% difference. All right, chat. We're doing the 50K select count. 50K select account. Wow, right as I ended it, it changed to 37 to 37. We're doing the 50K chat. When I clicked end, it was 38%. So that's what we're going to do. All right. Here's the deal, chat. Here's the deal. I'm going to post a link to my Discord. There's a channel in the Discord called Stream Giveaway. Here's a Discord link. Make sure you're in Discord. I'm going to give you guys a few minutes to hop in Discord. Give you guys just a few minutes here. There's a channel in there called Stream Giveaway. Give you guys just a couple minutes here before I give you the keyword. You're going to type the keyword in the Stream Giveaway channel, chat. You'll type the keyword in the Stream Giveaway channel. The keyword is. Go ready, chat? Show us your toes so I know you're not AI. There you go. All right, chat. The the keyword Daddy Pal. Type in the Stream Giveaway channel in Discord. Thought that was the key sentence. No, that's not the key sentence. Oh God. Daddy Pal keyword. Type in the Stream Giveaway channel. Oh gosh. Also, if you're not already subscribed to the channel, chat, make sure you hit that subscribe button. We're live. We take trades live. We trade a live personal account, real live money that I've funded myself, chat. We do trade Prop Firm on stream, but we also trade our live personal account as well, right here in front of you guys. If you want to catch that, be sure to hit that subscribe button to catch the live streams, baby. Holy. Also, remember, Tradeify right now is 40% off That ends tonight at midnight, chat. 40% off. It ends tonight at midnight. Use code JM. If you use code JM to lock it in at Tradeify, send me a screenshot in Discord. Send me a message in Discord with a screenshot. That'll enter you for a free 150K straight to funded account giveaway. I'm picking 2 winners, chat. And if you buy multiple accounts, I'll get you multiple entries. So if you buy 5 accounts, show me the 5 account screenshot, and then that'll enter you for the giveaway. You got multiple entries. Kevin, no, type in the stream giveaway channel. Daddy Powell. Give you guys 1 minute here. Give you guys a little minute. Just a little minute. And we got duck races coming alive, baby. The duck race is going to come alive. All right, chat, grabbing the list now. And then we'll do the duck race. I gotta have ChatGPT create a clean list of names for me. A lot more today. A lot more today. 87 of you. Okay. Let's see. Let me get this name here. Get the names. Go to duck race. Remember, there's not... Oh, wait. Why is it not... Wait, why is it only doing... What the heck, bro? Hang on. Hang on, chat. There we go. Now it shows it. All right. There's not actually 165, chat. It's counting the spaces in between the names. There's about 87 of you in here. 87. All right, chat. Y'all ready? There we go. Chat, you guys ready? Good luck, bro. Again, this is where preparation meets opportunity, chat. Preparation meets opportunity. This is where you should have been trained up, had the ducks trained and ready to go. You guys know we do this all the time. You should have had the ducks ready. You should have trained them up. You should have gave them the performance enhancing drugs. You should have gave them everything they needed to win this race, because it is absolutely the race to win. 50K select account giveaway with Tradeify. Good luck. Good luck, baby. Holy, we got the race started off. The tail feathers are absolutely wagging, baby. We have It's Me, we have Mr. Bond, we have Carrie, we have SKJ, we have Chix, we have Wealthiest, we got Tiffany, we got Sue J, Danichi, Wealthiest, Tris, Fresto, Gator, Jason, Fusion, Lunar. Holy, chat. You guys should have been absolutely prepared. You guys should have been absolutely prepared, baby. Holy, because you knew this was coming. You absolutely knew it was coming. If you don't see your duck, it's probably because you're way in the fucking back because you're slow as shit because you didn't train your duck. Holy. It's probably because you didn't train your duck. You are way in the back, baby. Way in the back, way in the back, way in the back. Bielka, you're in there. I saw your duck. You're in there. Y'all are just way in the back. You can't see your duck isn't even in the race because y'all slow as shit, bro. Y'all way back here. Holy. Fade the Spike. Kevto Bias. Liquidity Legend, Poncho, Trader Development. We got Midi. We got the, I can't see that name. Edge Engine. Holy, the tail feathers are absolutely moving, baby. The tail feathers are moving. They are shaking. There are ripples in the water. One of them's actually shedding. I think I saw a tail feather go by. Holy, who's going to win it, baby? Who is going to win it? Ian Delon. Uh-oh. What happened, Ian? What happened, dude? Look at G-Man. Mario. Look at Mario. Mario. Holy market maker Mario, baby. Holy moly. Market maker Mario coming in at the last second to take home the big W. Taking home the big W, baby. Holy. GG's Mario. Send me a message in Discord. I'll get you a code for the 50K account. Chat, nobody does duck races like I do. Nobody. All right, gotta get the duck sign out of my face. All right, chat. GG's, baby. If y'all aren't already subscribed, hit that subscribe button. We're gonna call it a day, man. Ain't no PA to trade here. We're not gonna sit here and watch it. We're just gonna call it a day off that, baby. Love you guys. Hit that subscribe button if you're not subscribed already. Hit that like button on your way out as well. Make sure you're subscribed, chat. I will see you guys tomorrow morning. Stay beautiful if you continue trading. Be safe. It's a wild one out there, y'all. Wow, chaw. I meant to say y'all and chat at the same time, and it came out chaw. It's a wild one out there, chaw. All right, chat. Peace. Have a good one.